This past week was absolutely insane. We made over 1 to 31 risk reward ratio in just 5 days of trading. And I'm about to show you exactly how we did it step by step. I'm going to break down the entries, the exit, and the simple strategy that enabled us to make this possible. But here's the catch. If I just missed one key detail, this whole week would have been a disaster. All right, so make sure you watch to the very end as I show you everything step by step. Let's get into it right now. As you can see, this is the overall view of what happened last week. Here, the number of trades we took and the name of the pairs, and this is the average risk reward ratio that we're able to actually get on that, and this is the total number of pips that we actually included last week. So you can see that right here, our overall net gain was 1 to 31 risk reward ratio, and our net pip gained was 274 pips. All right, so let's get into the details of this right here. So our first trade last week was a trade on gold, where we're risking about 11 pips to potentially make about 222 pips right here. Let me show you exactly what was happening. So you can see that right here we had a nice drop based rally, broke of structure to the upside, multiple broke of structure to the upside, and also we had liquidity right here. So we had to just wait for the market to take out the liquidity, the agent session right here, and then the market, once the market came into our area, we were able to execute this particular trade right here, and it was a nice trade. You can see from here the market actually ended up going in our direction, and at this particular point we had to move our stop loss to break even. So it's always important that you pay yourself as the market makes money available to you. And then after that, we saw the market beautifully push to the upside, and at this particular point we secured about a 1 to 5 risk reward ratio. The market was running over 1 to 9. Okay, and then soon after that we saw the market continue to actually push in our direction, and at this particular point we had to secure about 10 R so that we pay ourselves as the market is making money available to us. And then soon after that we started seeing the market retrace, and then we were able to get out with the 1 to 12 risk reward ratio on this gold trade. Hence you've seen this nice 12 hour right here with the 132 pips target right there. And then you can see that the next trade after that was a trade on Nasdaq. Let me show you what happened. It was here. We were risking about 10 pips to potentially make about 170 pips. We had a nice beautiful drop based rally with multiple break of structures to the upside. The market came into our area, we decided to push to the upside. We entered right here, 10 pips stop loss and 170 pips target, making it a 1 to 17 risk reward ratio. And then at this particular point we had to go break even because the market had actually moved in our direction and we had broken this level right there. And then after that we saw the market continue to push in our direction beautifully. We secured about a 2 hour right here while the market was running over 5 hour. And then after that, what did we see? We saw the market now start to reverse, push to the upside with big momentum. And then we had to secure about 1 to 5 at this level right here. We secured about 1 to 5 risk reward ratio just in case something happens. And then talking about that, we saw the market now give us this retracement, and then this carried us out. We were able to get out with the 1 to 11 risk reward ratio, and beautiful it was. As you can see from here, this was a 1 to 11, and everything was communicated in our private community, as you can see. And then soon after that we had another buy opportunity on Nasdaq, where we had a nice rally based drop supply zone with liquidity right here, which was taken out. So we need the market to pull back into this area. As you can see, we bought so that we could actually sell. Pretty smart, right? So at this particular point, once the market came to our initial area where we wanted to sell from, we saw the market start to actually go in our direction, started to reverse beautifully. However, you can see that the market had gone over 1 to 1 risk reward ratio, and after that we had to go break even, and then the market ended up going against us and we were taken out at break even. Hence the result right here, break even. And you can see from here as well, we were break even on this particular trade, and I actually made a video about it where we caught about a 1 to 17 on Nasdaq. Okay, the next trade after that was a trade on GBP USD. Beautiful trade, a nice drop, a rally, broke of structure, market taking out the Asian session. 3 pip stop loss and 29 pips target. What happened here? As soon as we entered, we saw the market beautifully pushed to the upside with big momentum candles right here, nicely breaking that structure right there. Once we have the break of structure, we go break even, and then soon after that we saw the market really push to the upside, and at this particular point we had to secure about 3R, and then soon after that we saw the market going all the way to our take profit. When I say this week was crazy, I really mean it. It was absolutely amazing. And you guys, if you're not in our community, you literally missed out, because last week was amazing, guys, amazing. Okay, so after that GBP USD trade, as you can see from here, this is the trade that we had right here, 1 to 11 as well. This was in the same day, no, the following day, right? And then the next trade after that was a trade on a Nasdaq, a nice drop-based rally with break of structure right here, and then also a liquidity, break of structure and liquidity. After the Asian session was taken out, the market came in our area right here, 8 pips stop loss, 18 pips stop loss, and 270 pips target right here. We entered right there, and then unfortunately this market ended up taking us out for a loss, I think. Yeah, for a loss right here. Yeah, this was a Nasdaq trade. We took an 18 pip stop loss, and then we were taken out. Okay, let me see if we have a chart here. It's not loading. So the next trade after the that trade right there was another trade on gold, where we had a nice rally based drop, QML rally based drop, suppliers one with liquidity right there, and then the market came in our area. We executed with a 15 pip stop loss and 198 pips target, and then this also was a loss, as you can see right here. We took a loss, another loss right there, and then we had to actually re-enter after the market took us out, because you can see that the market pushed the upside, we're taken out. So once the market had to show signs of reversal, we had to go for a re-entry. Unfortunately, this re-entry also was a loss, right? So you can see that we had now, after that trade, we had another loss right here on gold. We had 2 losses on gold. Normal, because the market works in terms of probability, and the outcome of every individual trade is always random. So the next trade after that was a trade on Euro USD, where we had a nice drop-based rally with nice liquidity, which was left right here. So we entered this with this trade with the 3 pips stop loss and 70 pips target. Unfortunately, this trade ended up becoming a loss as well. So that was like a fourth loss in a row after that Nasdaq trade. And as you can see from here, that was it. So this was a trade right there. We took a loss on that one, and then guess what? That's normal. The outcome of every individual trade is random. We don't know how, or the sequence in which these wins are going to come or the losses are going to come. So this was a loss right here. We lost this trade, and then after that trade we had to do a re-entry, because the market was still giving us signs of actually reversing to the upside. Unfortunately, this was a 5 pip stop loss and 70 pips target, and then guess what? We ended up losing this trade. And then after that, we took a Nasdaq trade right here with a nice rally-based drop-based rally, multiple break of structures, the market coming into our area, 18 pips stop loss and 350 pips target right there. Let's see what happened. So the market had to move in our direction. Beautiful. We actually had to go break even at this level right here, because the market had broken structure to the upside. We went break even, and then the market continued to actually push in our direction. We saw the market really push it to the upside. And I was like, okay, now let's secure how many R? We secured about 2R on this particular trade. This trade was crazy, right? Let me show you what happened. So after securing 2R, the market did what? Did the craziest thing. The market came and tagged us out at 2R, and then just went to the upside. I think I made a video about this. As you can see from here, the market ended up going all the way to take profit, and we were left out because we secured, we tried our stop loss too close to where price was, instead of waiting for that structure that was supposed to wait for. You can see from here, this was the trade review I made on this particular trade. You should watch it if you have not watched it. And then the next trade we took was a trade on gold, where we were risking about 8 pips to potentially make about 16 pips, 116 pips, a nice drop a strategy, multiple break of structures, then liquidity right here. The market pushed in another direction, then came here. Once we saw his, we had to actually take a buy. After that, the market actually took us out from here, as you can see right here. So we took a loss on this one, and losses are part of the game. As you can see, the wins and the losses are going to come in a very random fashion. As you can see, this was a loss right there. And then after that, what did we have? We had a trade on USD. We were risking about 7 pips to potentially make about 88 pips. And then it was a nice drop a strategy, break of structure to the upside. Agent session was already taken out. So once the market came in our area and showing me signs of actually reversing, we executed. And then soon after that, we saw the market beautifully push to the upside. And at this particular point, I had to ask the community to actually go break even. And then what happened? The market literally came back right there and took us out at break even. Crazy. And then you can see from here, this was another re-entry. We tried to re-enter because the market had given us a push to the upside, came back into our area. As long as the market is still giving you signs of actually reversing, you are obligated to take the trade. So we took the trade. After we took the trade, unfortunately, this trade turned out to be a loss. Very sad. And then the next trade was on gold right here, where we're looking at a very nice buy opportunity from here, where we had a nice rally, drop a strategy with broke of structure. And then guess what? The market came into our area. We executed for a buy, risking about 30 pips to potentially make about 226 pips. And then the market beautifully pushed in our direction right here. And once the market came to this area, as always, we trailed our stop loss to break even. And then, and as the market continued to push in our direction, we had to continue to secure price. At this particular point, I had to just put my stop loss just behind this right here. And then guess what happened? The market retained with big push to the downside, and we were taken out at 1 hour right here. And it was crazy. And I made a video about this right here, and that was the last trade of the week. Looking at this trade was this last week was really amazing because one, we continued to actually follow our strategy even after losses. So we had a very nice scenario where we had a series of wins in a row, and then we had a series of losses in a row, and then a mixer of wins and losses right here. But the most important thing is to continue to follow your strategy despite the outcome of individual trades. Guys, the market works in terms of probability. All these setups I've shown you guys, this is just one setup. Like literally, if you look at this is like one setup. Like everything is the same. Literally, it's very similar. Why do I have the confidence to be able to execute this strategy? Because I've seen this strategy work miracle. I've seen this strategy over time. It's been working and it has always working, right? So I don't have to tweak anything. I just simply execute. I understand that at the end of the day, I don't know which trade is going to win. I have no idea. But over a series of trades, I'm absolutely confident that the market is actually going to make me profitable because I have the data, I have backtested, and I've seen that this strategy actually works. So my only job is to make sure that I'm spotting the base of setups, I'm respecting risk management every time, and I just continue to execute. If I can do that, I can 100% assure you that you are going to be profitable. But what happens is that most people, when they incur losses like this, guess what happens? They change. They change their strategy because they think the strategy no longer works. But this is just normal part of trading. The wins and the losses are going to come. We don't know when the wins are going to come. We don't know when the losses are going to come. So our job is to simply execute our strategy every time. If you can do that, I can tell you that the outcome at the end of the day, you're going to be profitable. But you have to have a confidence in the strategy. And that confidence only comes through having seen the strategy work over time. Right here, I've been trading over 5 years now, and I've been in the market for a long time. and I've seen this strategy work for me, right? So because of that, I had the confidence to be able to execute. It might be different if just started using this strategy like 2 days ago. If you faced a series of losses in a row, you are most likely going to give up because you think the strategy doesn't work. It's because you don't think in terms of probability. And when you've done the work, at the end of the day, you'll know that I'm going to be profitable. And that's how it's supposed to be. You have to find a strategy that you're comfortable with, stick with that strategy, keep on executing, and at the end of the day, you're going to be profitable. So this is exactly what we do right here. As you can see, as you've seen from our community right here, we're able to communicate every step of the way. When we entered, when we tried our stop loss to break even, when we moved our stop loss in profit, all that was communicated, and that's extremely important. And that's why you have to be part of our community, because here we'll show you everything, both the wins and the losses and everything else. All right. So if you are interested in our mentorship, which comes with lifetime mentorship, lifetime signals, our M&F mastery course comes at only $250, where you get lifetime mentorship, lifetime signals, and a lifetime one-on-one whenever you have any questions. You get that once off. And if you're interested in signals alone, it's $50 per month, and we are able to have access to our community. All right, so you guys, I really hope that you actually found value in this video. If you have, make sure to subscribe, like the video, comment in the comment section, and remember, more than 50% of you guys are not subscribed, so kindly help us by subscribing so that we continue to make